Hello, welcome to another live stream and another episode of Daily Market Mastery with me, Christian Rauchenwald, on this sunny Wednesday. I hope you all had a great week so far. As always, before we jump into it, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way professional financial advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below if you're curious. And the one thing I recommend usually is, if you haven't done so, check out the Elliott Wave principle. You can read the book online for free when you use the link in the description down below, and you can use the same link to get yourself a physical copy as well. That said, don't forget, like, subscribe, enable notifications, and with that, we can jump straight into it. Now, just like the last couple of days, we have a pretty break-even start into the day. And I want to start with a few things. First of all, I figured out how to do conditional orders, which is quite nice and is relevant in one aspect, because we opened the 21.50 put options in Intel that expire this Friday. And as we can see, I covered it yesterday. We got it a little wrong. We made it based off this movement. So I thought that this movement here is done. And then we get wave C. We got another push a little bit higher, which changes the target area. But it looks like we might get to see that last push as well. So it's also possible it will just go up from here and the option will expire, not worthless, but we take the $23 loss. The option looks like this. So if we today were to reach, we can see at 22.30 today we are in profit. And if we reach 21.60, we make a small profit on this trade. Now I've created a conditional order for that. That basically is if Intel falls to 20.91, in which case, I have to close that window. So if we reach 2091, we can see we realize $130 profit, which is okay considering the $23.60 risk that we had. So it's 5 times the investment. So I can live with that. And that is based on the assumption, I'm going to drag that away for now, based on the assumption that this third wave, wave C, isn't finished yet. It could theoretically be finished. We reached the minimum target, but from the looks of it, I think this is 1, 2, 3, 4, and then we get wave 5 that still takes us into the area here. We might even still reach the 61.8 retracement, but I've set the conditional order in a way that if we reach 20.91, it will close that option at whatever is the mid price at that point and realize us a small profit. Now, if we don't reach 2091, the option just keeps open. If we go up, we have the maximum risk of $22.66. If we go down, then we might have a little less profit, or if we take a look at it, we see that by Friday we would need to be at least at 21.40, so to be break even, or actually 21.30 to have a very small profit. I mean, it still would be 100% return on the risk, but everything else we just take in quotes our maximum loss of close to $24. So that's one thing where it's nice that while I got in a little too early, so again, we made the trade here based on assuming that this is already the finished ABC, then there came another push. But overall, it looks like I was still right, especially since this wave or this candle here already went lower than what we had here. So, and additionally, I also created, we have another play. We have the beer put or beer, what's it called? Beer spread, in SPY. Where we are, markets are opening. Intel is in profit right now. Where we are right now also in profit, because our assumption in SPY is or was that we are basically going to correct from down here. We got in very well. So we're here on a 1 hour chart. We made the trade somewhere here, and it has been moving down. Now, if we look at the pattern, we can see right now we are at a $50 profit in this trade. If I turn out to be partially wrong, I think we should reach at least the 577.75. We can also, with the naked eye, see 1, 2, 3, 4, and then we should get our push to wave 5, at least to the 38.2 retracement, and then the actual correction will be bigger. We will get then a wave B and then a wave C further down. So from the looks of it, there is still more room for that correction. However, right now, from the pattern, we can see that we are right now already at a small profit in this trade. Now, this trade has a maximum profit, as we can see, of $252. And if we could close it today, we would be willing to close it for roughly 70% of that, which would be the case if we have two orders here. This one here is if we go above 584. I'm going to cover that in a second. And the other one is if we go now, come on, open the window. If we go below 573. So if we reach 573, we can see that today, I have to adjust it a little bit, that we get the 73 on the chart. We would realize $170 to $180 in profit if that were to happen today, which is around 2/3 of or a little bit more than 2/3 of the maximum profit that option play has. And we're okay to take that because then we don't have to worry about it anymore, which would be, as I said, at 573. 573 would obviously be down here, so that would already be the 61.8 retracement, which we might not get to see. On the other hand, right now for today, we have a second trade that if the option or if SPY reaches 584, then we also will close the trade. In this case, we have a maximum risk of $50 on the trade. And in this case, we would close it plus minus zero, so we have a few dollars profit instead of letting it go into the red again. So basically, if we would reach 584 today, then the trade would also close, because then very likely the correction is already over and we are through with it. Yeah. So there's like, on one hand, if we reach the 573, we realize 2/3 of the maximum profit. On the other hand, if we reach the 584, we just close it with a few dollars profit to get out of it, because then we likely by Friday will not get lower. So this brings us in the situation. I will obviously have to update that tomorrow. So tomorrow the prices change a little bit, yeah. But if none of that happens, so we don't reach 584 and we don't reach 573 today, then I would today, after market close, update the price level. So we then see that our stop loss on the upside would be around 582, so that we still close it with a profit. And on the downside, then the 2/3 mark would be at 574, for example, or maybe even 576.5. Yeah, so much about that. So those are two scenarios. I mean, I'm obviously not always right, but those are the two recent scenarios where we made two small plays. I mean, we know both of them have very little risk. So here our total risk is, actually, let's double check that it's right. So our total risk here actually is, 17.5 per option times 3. So our total risk is $45 or $48. And if we are right, we might get, if we take a 70% profit, if we manage to do that, we get around 3.5 times our risk here payout. And on the other side, the Intel option play that we have, our risk is $24. And we don't have a negative stop loss here, so we still have the $24 risk. Whereas on the SPY trade, we already have the order in place to actually, as long as it doesn't happen after hours, we would close that trade at least with a handful of dollars profit. So there's no risk anymore, in quotes. Whereas for the Intel trade, there is still the $24 risk. However, the upside for Intel is also unlimited, in quotes. Yeah, we do, however, consider that our pattern suggests we will only reach that area, which means we will take our profit here as well if we can. Since we still have risk in Intel, it doesn't make much sense to yet. I mean, if we look at the Intel options again, we can see that right now we are in the area. So 22 would be the mark where we have a slight profit today. And we are right now at Intel at 22.17. So we are not in a position yet to place an order to take out the risk entirely. But if Intel drops today further, as it should, because I said this will likely be 1, 2, 3, and then 4, and then 5, or maybe 3 not even finished, then 4 and 5. So yeah, those are two trades that again show that Elliott Wave Theory or Elliott Wave Principle can be used quite effectively to predict target areas, but also know when the turnaround happens. So those, again, I don't always get it right. There are plenty of trades if you check older episodes where I got it wrong. But those are two prime examples where we actually got in exactly at the right time. So I just wanted to cover that so that we have that at market open. Again, today in SPY, I would also expect there is the chance to get another push here to make a fourth wave finished. Fourth wave could be done here. I'm not going to bother to look closer to try to confirm either of that. But from the looks of it, it looks like we already are getting the fifth wave, and the fifth wave should at least, yeah, I mean, if we at least label that out. So assuming the fourth wave is already done in that downward movement, then we can see we should reach at least the 576 mark here, potentially even the 574. And our take profit for that trade is at, what did we say? At 573. So we might not get it to trigger today, yeah, but 573 would be the mark where we would get out here and enjoy. What would it be at most? Do we still SPY 573? Yeah, not much, like 1% return on the portfolio, or a little bit more than 1% return on the portfolio. And for this specific trade, they said like a 350% return roughly. Hi, Olga, great to have you here. And yeah, as I mentioned on Discord, great to have you there as well. Took me some time to notice. Novavax tanking a bit. I'm going to check that in a second. So I was just enjoying the wins we had, or not yet realized, but still. Yeah, then let's take a look at actually Novavax. Yeah, so just a second. So in Novavax, we have option play that expires in January. That option play has no maximum profit. So if I'm right, profit could be quite huge. If I'm wrong, the risk, however, is relatively limited, with $226 for the options in general. However, we still have a little bit of time here, but right now the option is slightly in the red, as we can see. Now, yeah, we are at 50% loss, so opt for that option. And Novavax seems to have a very bad day and break actually the pattern. That's really, really bad, yeah. I did not expect that. Oh, that's actually quite bad for my pattern here. So that's something where apparently I got it wrong. Yeah? So it happens. Question is, how do we adjust to that? So how do we adjust to that the best way? So the issue that we are having here is that this move right now already reached 855, which also broke the level here at 866, which means wave 4 cannot be here. Which means wave 4 theoretically could end here, but I would assume we still get a little bit movement down and then reach the 61.8 retracement, which is quite a bummer because we had the breakout from here. Now the question is how to label this mess, because now it's not a simple ABC free wave correction till here that may or may not have had a triangle afterwards, but now it has to be a more complex corrective pattern, which is a little tricky because, especially in this aspect here, because this looked like a nice 1, 2, 3, 4, maybe truncated fifth wave. So there's a lot of things that we'll have to remove from the chart, and there's a lot of adjustments that we'll have to make to figure out where we went wrong here. Then this is not our base channel, or not our destination channel, sorry. So overall, we still have a potential wave 1, 2 with a breakout from that for wave 3. Wave 3 reaches the 338.2 extension. No, doesn't. Almost reaches that level, yeah. So one of the usual levels that we would expect, which means we would right now expect to correct wave 3, which is this retracement here. On this retracement, I'm actually going to hide the chat message so it's not overlaying anything. On this retracement, we actually thought that with the spike through the 50% retracement, we have our ABC done here. And now we actually have to consider that this is some kind of combinative corrective pattern, which could be ABC, ABC, and then we would get another ABC. Yeah, I would expect now based on this, it probably will screw my option trade, to be honest. Yeah. So what's the price now if I would double down on that? So if I maybe April, and we have the, or actually I'm gonna do this and bring that over here. So it also changes our projected target areas. We also have to consider that, not by much, but where originally we thought $29 something till $59. If we reach the 61.8, we can see our target area becomes 27. So 27.16, or let's say 27 straight. So if we say Novavax, $27 target area, and then by January, So then the options are still on the pricier side, unless we go with a higher option. Although there, bull call spread seems like a nice risk reward if we are right. If we pick April instead, we'd still have like higher risk. So I'd be okay to put another $60 into that position. It's not a lot, but that shouldn't be much more than that. So then we have like $300 exposure on the trade if we were to do that. So, and if we are right and we reach the 27 mark, then we have a decent payout, and the second target area would actually still be 57. So we're obviously going to double check everything, but so if we reach the 57 mark, we don't even get that here anymore, or barely. We still would have what's that, almost 2,000% payout on the risk. So yeah, let's move that over to the other screen real quick. So that would mean buying the $20 call and selling the $30 call. Although then the question would be, if let's bring that over real quick. So then it's 56. But if on the other hand, so we assume our highest target would actually be the 57 mark. So if we go with the higher option, we can see that we have more profit potential for only a little bit more risk. So instead of $56, it's then $76. But also instead of being limited to $900, we would be limited at $2,500. So yeah, so we get more than double the profit if we are completely right for only half the risk more. So that would probably be an option. So that's for that's for January. So still for January. Now the question would be, how likely do we consider this? So on first of all, we shouldn't buy it now, but I would need to set up a conditional order somehow. So a trade ticket to basically buy that option when the stock hits that price. That's something I haven't done yet. So it's definitely interesting to look into that. And so if we were to reach the $8.08 mark, so the 61.8 retracement, then we would say we want to buy. Yeah, volatility is a little bit higher, yeah. So which also affects the price. But at the end, it's still like the risk reward ratio. So assuming I'm right, yeah, like, so if I'm wrong, obviously, right now we stand to lose $225.20, which is not that bad. In January, if we don't see an upwards movement till then, and I somehow got it really completely wrong, and if we see a recovery and I turn out to be right, in quotes, not on the first try, unfortunately, but with the 61.8 retracement, then that's still time. So till January, obviously, I mean, there's still quite some time, to be honest. Yeah. So obviously, tricky question is, will we make it? Will we make it January? So we're talking about, what do we have? January 17th. So is there a horizontal line as well? Yep, there, vertical line. January 17th. So that's our timeline limit in this case. So can I just format red? So that would be where our option expires worthless. Technically, if that were, I mean, let's apply. So corrections are really the challenging part in Elliott Wave Theory, because they can take so many forms. I'm lacking the numbers here as to how likely or how reasonably often in a triple zigzag or a double zigzag, actually, zigzag, wave X, but then wave X should be 5 waves. So it actually should be is it then, okay, I have to consult my cheat sheet. Impulse leading diagonal. Zigzag, any correction? Zigzag, okay. It could be a double zigzag. So we would have a ABC, any correction, which can be ABC, and then another zigzag, which would need to be ABC. But then we probably would even go below the 8.8, so we can even make the option play cheaper. But question is, will it check out till January? And if we do this till April, well, till April also works. But the highest option that we can sell against would be $30 call. So so if we do this till January, we can make the play up till 45. So we're basically, since we consider the maximum target to be potentially 57, yeah. And even so, if we where do we have that? So even if we were to reach the 78.6 retracement, no. If we reach the minimum target here, so 45 is the highest option. So technically, even if that move of the correction reaches almost the 78.6 retracement, then 45 would still be the highest target that we would expect, which means that the play here would still be good. And again, we should be able to get the option cheaper if we buy it here. If we don't go down here and we go up from here, we're anyway good because we already have two options in play. But if we first go down, we basically would just increase our position a little bit and average down basically, yeah, like average down in terms of like we have more exposure, and if we consider it per option, the risk per option is less. Obviously, overall, it's a little bit more money at risk, but also the payout would be much better. Now, however, if we move that same trade, I hope that makes sense, yeah? If we move that same trade to April, the highest option we could sell against is the $30 option. We limit our risk, and as we go further, that's the same issue, so there is no strike price for that. If we ever go to April and we do not remove, and we do not sell another call against it, which caps our upside, but also is responsible for reducing our cost, then we would need to almost double our risk. Yeah, so then we're at $400 risk for that option play, which, while not a huge amount of money, it's not a good play overall. Yeah? So so either make the gamble, or not the gamble, yeah. So but the play for January, and we wouldn't even need to go that high because we also would reach profits if we inject. I mean, right now we're at the $12 mark. We would need to move upwards, of course. So we can see that in December we would already be in profit in the, I don't know, like $15 area or so. I mean, profit for this specific trade, which still would be a 50% increase. I get that. Yeah. Let's take a look how we can set that trade to trigger at 749. So for that, I would need to somehow, what's it called? Order ticket. Okay, can I do that here somehow? Transmit? No. Orders. How do I do that? I mean, I can create obviously an order ticket from here. But that is then, oh no, that I can actually do. We can say we buy. And what would we buy then? We would actually, oh, we need a combination. Okay, so we actually need a strategy builder. Let's see if we can build that. So it's like a nice practice in dealing with interactive broker, which is very powerful, but also very, very annoying in some aspects. So we would get the $20 call on one end, and we would sell the $45 call on the other end. And now the question is, how the heck do I make that conditional? So how do I create an order ticket for that? if I go here, trade, order ticket, then we would want to buy, but we wouldn't want to buy the same thing. We would want to buy Novavax. No, we would want to buy the call, yeah. But we also would want to buy quote panel. Can I somehow insert column, configure a quote panel? Yeah, I'm really not sure how to pull that off. So technically I could just assign a lower price. So, but I would, it's a guessing game. I mean, or actually it's an educated guessing game. So right now that option is, so we would want to get in at, what did we say, at 749. Yeah, so, and at 749, although that's considering the current volatility, blah blah blah, so refresh that. At 749, what now, that at 749 that trade would be zero almost, so it would be $25 premium, and then minus 20. So where right now it's $30, we basically make the trade, but we say we're only willing to pay $5 for it. So then we could actually make the trade relatively big. So because if we would, so like here we are lagging. I'm not paying for the subscription right now for options trade. So, and while here it says the option costs $25.50. So again, buying a $20 call and selling the $45 call, buying the $20 call for January, selling the $45 call. It actually right now costs $30. So if it's right now $30 and at a price around 740, it would be minus 20, so it would be around $10. Okay, so we can actually say $10 is what we were willing to pay. I think that's as close as it gets to set up the trade. So, and we right now have what? We have 225 in risk, so we're actually going to make that roughly 250, so we can buy 2 of those for $20 combined, plus the fee, so $22 combined. If the price falls low enough to trigger that, which gives us, or would give us, an additional exposure. Now, if we look at the overall trade, so we have our Novavax $20 calls. Now, if we were to do that, we'd basically add 2 more of those, but on the other hand, we would sell $45 calls, but not 4 of them, but 2 of them. And then our overall graph would change like this. So we still would need to reach at least in November $15 ideally, or in January we still would need to break the $20 to get into profit. So we still would need to be right. Yeah. So I think that actually, so let's no, not saving it now because the order hasn't triggered yet. Yeah. But I think that's how we do it. So again, we buy 2 more 20 calls, we sell 45 calls. Although then it would make more sense to sell the 45 calls now. So this way we get a little bit of the risk out, and then we buy the calls separately. I mean, it's obviously not much, but so if we have two $20 calls, so we can obviously go and sell two 45 calls. Yeah. So, and then gonna update the, I'll do it on the other window real quick so that I don't have to switch between screens. So in Novavax, we now also sold two 45 calls, and we sold them for 0.12. And so that I can already save. Okay, save override existing trade. Okay, now that obviously limits our upside, but it's still a substantial upside. If we are right, that's always the big point. And on the other hand, we can now say, okay, we would buy two more $20 calls. Or we don't, yeah, or we don't. So at what price? So right now, so then we would need to look at only build long call, Novavax, $20, January. So we see that right now that call would be $43, and we would be willing, yeah, we could then buy one more. But would that still be $30 minus 30? So it would be still, we can still do the same play. So we say we're willing to buy the $20 call, two pieces, but only for $10 each. Yeah. So that somehow checks out. Yeah. Okay. Now that about Novavax. So I think considering this might be either that's the finished correction and we're good, in which case we just got a little bit of money back and kept our upside at $45, which then anyway is, yeah, I mean, there's still more maximum target area, but it's still not a bad cap for the upside. Or we indeed will get another push a little bit further down to the 78.6 retracement, or roughly somewhere here, in which case we would likely be able, based on the guesstimation of the option price, to add two more call options for if then we get the upwards move, we're good. Yeah. So that's that. Now, Olga says, as I put my tinfoil hat on with Novavax GameStop, I'd expect some more or some move in GameStop soon. Yeah, I mean, we're all expecting some move. The question is just in what direction. So I'm still waiting. So there's no news, nothing unchanged from yesterday's episode and the episode before that. Both options are still on the table. Long term, I'm still bullish. Short term, the $15 mark could also be, be on the way before we then go up. Now we covered Novavax, which did not do what I expected. I actually should start. I mean, our Novavax option was already $60 in profit, which is also not a lot, but it was still in profit. I actually should start to set up those conditional order tickets for pretty much all the trades once we are in profit. Yeah. This way, I can also, by the way, realize a proper trailing stop loss, or maybe not trailing, but an easy way to set up a stop loss this way. Just have to check and make sure that if we, so if I close the broker, that order actually is still active. And obviously with options, we are tied to the open market times and so on. Yeah, but anyway, yeah, so we covered that. Looks like we got it right with Intel. Looks like we got it right with SPY. As for Intel, question is, should we now already add a stop loss in quotes? So to say, where would it be? So 22 would be, yeah, it's like 20 cents. That's not that much, yeah. 22, so 40 cents up would be the mark to set the stop loss. But also for the Intel, we have put, so we have no cap on the potential profit. Although we already said we would realize if we reach the target price area. So there we would then sell those two. And for SPY, yeah, looks like we're getting wave 5. The question is just, will it reach the 576.59 or not? But we probably will not reach our take profit here. So we might actually manually, I might actually manually today before the market closes, depending on how they look like, manually close them out and just take the profit. But other than that, yeah, our GameStop calls are still 2 days away from expiring. Our maximum profit there is, doing the math, 880 times 5, so $44. 70% of that would be $30. We're now at 25, so we might actually close them out, or not close them out now, but set an order that if it happens today, so if we paid $8.80 for them, we want to buy them back for at most 30% of that, which would be $2.60. So, well, we already have an order for, I guess we have one, we usually have one game. Yeah. So today we would actually be willing to buy them back for $2 a piece, since we cannot enter 0.025. And tomorrow we'll have to consider, or tomorrow we can also buy them back for that. And I wonder, it makes me wonder if I can attach so it makes me wonder if I can somehow have this order trigger another order. So because technically target order, bracket orders, because the moment we close that one, we actually want to sell the $30 call for next week. Yeah, topic for another day probably to look into that. Yeah. Okay, so with that, we can actually check our other suspects. So one of them is Barnes & Noble Educational, where on first glance, we're still waiting. So it's slight upwards movement, but we need to break this line here to have some kind of confirmation that our correction actually ended where we predicted it would end. Until then, it's still possible that we go further down, but our position is also so small and our average price is obviously a little higher than where we are right now. We got some shares at lower prices and some at higher prices. So there's no point in adding any kind of stop loss. But so far it looks promising. We pierced the price level that we expected, and from there it looks like we're going up, but we're not out of the woods yet. Yeah. Immersion also green today, but yeah, doesn't change much apparently. Yeah. We are at the 100% point and we broke through here, so we're still waiting if we'll get another push, which would make sense to make this a 5-wave move, or if we actually will go up. So patience is key here. Cause, there we finally are getting some upwards move, which is nice because we are looking for the confirmation that we are indeed done here with the correction down here at the 50% retracement line. And I think once we break the 879, chances are that we are indeed done and we will not fall below 6.44 anymore. So below, or the low that we had here, 6.52. So that's actually some nice development, even though our exposure there is also not too, or actually we have $1,000 in there. So it's, yeah, not too big, but still. And yeah, then we have the usual dead suspects that we don't even look at and just hope for miracles. Thankfully, not too much and too big positions. And what's NEO doing? NEO is going further down. Yeah, we also had a nice exit actually because we got out here. Let's reset the scaling. And then and then have a sip. Looks, I mean, it's possible that we have something like A, B, and C, and we would be soon done with the correction. God, I love Elliott Wave Theory. Although no, less likely, because unless that's a truncated fifth wave, because that could be a corrective move in a truncated fifth wave. But if it's not, so if the fifth wave, the preceding fifth wave ends here or terminates here, then this would be the part of the correction. It would be 1, 2, 3, 4, 5. Then we would get a little upwards move, and then we would go further down. So we would then at least reach the 61.8 retracement at some point. So for now, I think the correction will continue. And Intel recovered. Yeah, we'll just have to keep an eye on it to consider when we get out. NVIDIA. Yesterday was the 15th, so that happened. Oh, that happened yesterday before. No, 15th. Today is the 16th. Yeah, so that happened yesterday. What we're on a 4-hour chart. So while we were streaming, yeah. So, but that's actually an interesting aspect. We went lower here than we were here. So we actually did not reach our minimum target that we would expect for the fifth wave move that we think we have here. Which means this here is correcting like that, which brings up the question, just double checking real quick. So we're either correcting this or we're correcting that. I mean, it's also possible that we're correcting the bigger move, but I think that might be the most likely. Now, here we already have 38.2 retracement. And from the move, this could be either 1, 2, 3, 4, 5. Then we get ABC, and then we correct a little bit further. Or this could be ABC, where wave C is just relatively strong. I would for now still stay out of it until we get a clearer picture about that correction. Although I know yesterday it looked like we will still get another push up, but to be fair, in that assumption, we would have anyway had to have the stop loss here, and it would have triggered yesterday already. So unless we look at the bigger picture and long-term situations, but from the looks of it, we have a 1, 2, 3, 4, 5, A, B, C, and here we're currently forming the next 5 waves up, correction down, and then we go up from here. Although from the looks of it yesterday, we thought this is 1, 2, 3, 4, and 5 is not finished yet, but it looks like this pushes all of it is one impulse. So yeah, like that part was like wrong on my end. Happens. Yeah, well, I don't have any exposure, so we're gonna keep an eye on it, and maybe at some point we see a really, really clear spot. That's one thing that I'm personally still having a hard time. Sometimes it's to actually go and look for other assets instead of jumping into or trying to see a pattern where there is no clear pattern in quotes. Yeah. So there is nothing clear in NVIDIA, or I mean, not clear enough, and therefore no point in entering. Whereas there might be a chance that we find something somewhere else that is clear. Yeah? Now, I know for the last couple of weeks, I mentioned that Novavax has the most promising setup, and it still does. Yeah, like, although one is to consider that there might be a little bit more downside before we go up, and the issue is only the time aspect if we consider it as an option trade. If it's not an option trade, but buying shares, then I think it's there's still a wave missing. I don't see a scenario where this is A, B, C, and we go further down. Obviously, that correction can drag on, unfortunately, but which then screws our options. But overall, I still see 1, 2, 3, 4, and there should be a fifth wave coming. Again, that's just my opinion. I might be wrong, and we get wiped out here. But that's why I then like the options, because I have limited risk with still, when I'm right, decent payout, because now we have a $250 risk total if we manage to get the other 2 call options. Otherwise, it's still $230. And if we are completely right, we can have a 4-digit payout with that, Whereas if I would buy shares for $200, if I would have bought shares here where we got the options, I would have gotten 20 shares. And even if we go to $50, it's not even close to what the option would pay. Obviously, the benefit is the options will be worthless here. The 20 shares would still have a value, even if it might be less. Yeah, but yeah, those are the trade-offs. Olga says, I barely enter mainstream stocks because of that reason. Yeah, but the issue with that is that Elliott Wave principle or Elliott Wave theory is based on MISC psychology, which means it applies mostly in indices, because there you have the trading actions and reactions of just so many people and businesses that are affecting that index. And then obviously in the mainstream stocks, it also applies very well because there again, you have a bigger group of people. Whereas if we pick like smaller stocks with smaller volume and less people that are actually trading it, then the chances that the pattern becomes invalid or that there is no visible pattern at all are higher. So it's, yeah. Special situation stock, sure, sometimes it doesn't play out at all. Yeah. Yeah, I mean, that happens either way. One can be wrong. Yeah, like nobody's right all the time. And at the end, it just matters what the end result is. Yeah. And obviously, to not get too greedy and risk everything in one trade or so. So like risk management or bankroll management is actually, as we both know, a crucial aspect. And yeah, I usually find other interesting ideas by checking peers, screeners, and sometimes even write-ups or fund letters. Yeah, I mean, I check, so I'm subscribed to, like Hindenburg research, and so those typical short sellers that basically share their research when they go short, which is obviously a little bit manipulative because they are like sharing it with thousands of subscribers when they already have their short position. And then there are obviously people that blindly jump on the train. So it's kind of like a self-fulfilling prophecy a little bit, but their research is usually solid. Like SMCI has some creative accounting, yeah, and they share, SMCI was one of them, and then there was Adani. And so usually, obviously, there is a huge drop when they share. It would actually be interesting to automate that, so to basically somehow scrape the email notifications and their blog, and whenever they post, automatically extract the ticker and automatically buy puts or go short with whatever, a certain percentage. I think puts would be the smarter play because you have limited risk, whereas a short position can blow up and wipe out more than 100%. So that it's not like I have to wait until I read the email and then get to the to the broker or to the computer, but that it's like automated. That might be actually a play worth making, but obviously also only with a small percentage of the account or so. And yeah, like if I maybe someday have the time, I will look into that. But other than that, yeah, I mean, I obviously you are sharing stock sometimes, and I'm also in some Reddit groups. So obviously the usual Wall Street bets and so on, and then Theta Gang for option wheeling, and then the short squeeze subreddit and so on, where people share things, and I then, when I have time and think of it, I look at it. But yeah, it's anyway already taking up a lot of time to, I mean, you can see today's stream is already 45 minutes or so, and I still haven't covered everything, just to go through the usual suspects. So once I have more time for dealing with all that stuff, yeah, then I probably would also consider alternative sources. But I would also then probably go, like, one thing that would be a good play, in my opinion, so considering Elliott Wave Theory, look up the biggest gainers. Yeah, so whatever for the day, who was had the biggest gain, because in Elliott Wave Theory, very often the third wave is the strongest move, and we have our usual turnaround areas that we, in quotes, can predict. How accurate is, I mean, obviously there's no 100% accuracy with anything, but we know that usually here it's not the case, yeah, but usually the third wave terminates at the 261.8 extension or at one of the following levels, yeah, but which means if I were to look at the top gainers for yesterday or pre-market top gainers, it would give me, or I could look at them and then based on the pattern, try to confirm that it's a third wave. And if it's a third wave, try to see where wave 3 will likely terminate, and then at that point buy a 0-day expiration put option or so, if there are 0-day expiration options available for that asset. Sure, sometimes it would then shoot further and the option just expires worthless in the evening and it's then a fixed loss of whatever many dollars. But then also there would be probably situations, again, not here in that case, yeah, but yeah, like in NVIDIA, where do we have, so, although NVIDIA options, obviously the prices are different, but yeah, I'm not sure if I can just now magically catch. Yeah, so here the 261.8 would have been, yeah, I mean, a 0 DTE probably, no, would still have paid out. So on the 7th, it went then down, yeah. So if it would be pre-market already up, and then we have a very, very strong move, in that case, missing most of the strong move, or maybe even getting it early enough to get the 0-day call option, because it should go at least to here or here, yeah. So yeah, but it's like a time issue or a priority issue. Other things are just more relevant for now. Yeah, let's actually move on. So NVIDIA, as said, right now, I think the correction will still continue. Got it partially wrong here because I thought we still will get a push to our minimum target. Didn't happen this time. Still fairly confident that this is some 1, 2, 3, 4, 5 move correction, and that we then therefore have to have a 5-wave move in here as well. 1, 2, 3, 4, 5, where wave 5 just didn't go as long as we expected. And we're now correcting this whole move, which could be done here, but from the overall look, I think we'll get another push down and should potentially reach the 61.8 retracement, which would mark a potential entry point. Stop loss would then need to be at 114.70. Yeah. Moving on. Yeah. What else do we have? Wheeler, also unchanged. Really hard. I mean, I covered it yesterday a little bit more, so for everyone that's curious, jump in there. And SPY, as said, okay, now we're going up a little bit. That's a little bit against us, because that could mean that we're actually getting an ABC move here, which right now obviously takes away from the value or the pending profit of our option. However, we already have our order in place that if we reach 84, that would be the point where we would actually get out of that trade, plus minus 0, because then we missed to take the profit here and we clearly got it wrong. But again, from the overall look, this should be 1, 2, 3, 4, maybe not finished yet, as we say, and then, as I said earlier, point 5 down, wave 5 down. And then Nasdaq, yeah, there we probably, same thing like with NVIDIA, obviously, so didn't reach our minimum target here that we were expecting. But from the looks of it, we have a 1, 2, 3, 4, and then 5. Question now is, are we retracing this here? Or are we maybe retracing this here? And depending on that, we see we have different profit areas. Or not profit areas, but turnaround areas for that corrective pattern. The worst case scenario here, since we didn't make a new high, would actually be that this is either wave 1 and wave 2, highly unlikely considering how high we got here and almost made a new high, or wave A and wave B, and we're currently we're going to see the progress of 1, 2, 3, 4, 5 that takes us down somewhere here. If we would get a confirmation for that, which would be the case if we want to play that defensively, if we were from here to start a pattern that actually then goes below the 18,400 mark, then while it would be obviously missing out already a huge drop, then one could be fairly certain, again, just my opinion, do your own research, don't bet your house, that we would get further down and would have another, I don't know, like we could then use an expansion. So if that were the case, and this is wave A, followed by wave B, then we can see our minimum target would be here, but wave C should make a new low and would at least reach the 17,200. So we would from here to here at least expect another 1,000-point drop. Obviously, it should play out as 1, 2, 3, 4, 5. So we would have to consider the potential wave 4 or whatever wave there would be in terms of considering where the stop loss should be. But yeah, right now it's too early to tell what we are correcting. I'm just saying there is the option that this will be A, B, and C for a really, really big correction that basically then lasted, like half a year or maybe even close to a year. But we'll have to, keep an eye on that. And I think that's it for today, to be honest. So we have our orders in place. The $30 call we buy back if we get it for $2 today. Tomorrow we'll adjust again, and on Friday we buy it back only for $1 per option. For our SPY, we have the orders on both sides to take our profit if we fall to a certain price, or if we reach the upper boundary. Just have to make sure I don't miss that. I mean, worst case in SPY, what could happen is we go up to 584 and we close our trade, and then we go down, because then we would suddenly be selling options when we actually don't. Or it would actually also not be too bad. Loss would be, or the risk would be limited if the trade even opens at all. But yeah, so have to keep an eye on that. We'll definitely check today in the evening and maybe manually close the Intel and SPY play for small profits. Olga, thanks for stopping by. Anyone else that lurked, also thanks for stopping by. Don't forget, give the video a thumbs up. That really helps me a lot. And enable notifications, subscribe, and whatnot. Yeah. So see you then all tomorrow afternoon for another episode of Daily Market Mastery, as usual, around 5 minutes before the market opens. And with that, have a pleasant rest of the day, and till tomorrow. Bye-bye.